There it is, today's closing bell at the New York Stock Exchange.
Dow Jones shot up at the open, but what happened at 2:30 p.m.? As you see there, pulled back much of the gains, ended the day, I guess, relatively flat, up, more than 70 points at this moment. The S&P 500 and NASDAQ also ended the day in the green. The S&P is up about 0.5%, the NASDAQ up more than 1%. So marginal changes today.
So Rachel Siegel joins us now. She can fill us in on what went on today. She's an economics reporter at the Washington Post. Rachel, great to have you here. What was driving the market today?
Today, the markets, like so many of us, we're just trying to get a grasp on what is happening with the fallout from the banking crisis that we saw earlier this month, Federal Reserve's plans with interest rates over the coming weeks and months, and also any remaining decisions that lawmakers have about ensuring deposits and whether this banking crisis really is truly over.
We should also highlight another data point that's part of everyone figuring out what's going on. Unemployment claims dropped last week, the number of Americans claiming for these benefits. And we know the Fed is weighing labor as one of the indicators for its ongoing interest rate hikes. So what do you make of the current state of the job market? Seems relatively strong, but we are reading about a lot of layoffs in a lot of places.
Just remarkable that the job market has been able to stay so resilient through so much of the things that I just mentioned, this banking crisis, uncertainty about when inflation will come under control, how aggressively the Fed is going to have to continue to try and slow the economy. Through it all, the job market has just been churning. You mentioned layoffs that we have seen, but so far they've been fairly limited to the tech industry, the housing industry, and have not yet spilled over into widespread layoffs. The fact that that has stayed consistent through so many things that have just gone in so many twists and turns is really just remarkable to see.
Rachel, looking ahead to the future, the Fed did indicate that rate hikes could be coming to an end. Given the current inflation rate, what are the expectations in the coming months? What can Americans look out for?
Well, the Federal Reserve raised interest rates again yesterday during their March policy meeting. They'll convene again in May. And so far, the expectation is that we might see one more interest rate hike when they gather in May, and then maybe they'll pause. Maybe they'll keep rates at this very high level and wait to see how those decisions ending up slowing the economy. The issue, though, is that there are so many caveats that come with that statement. The Fed's estimations for what it will have to do have had to change repeatedly as inflation does not pan out the way that they expect it to. So that is our best guess for now as to what the Fed might do, but that's something that we'll get a clearer picture on in the weeks and months to come.
All right. Rachel Siegel, thank you so much.
Thanks, Rachel.
Thank you for having me.